and I'm your host, Dimitri, and I'm calling you from Baltimore, Maryland, and I want to let you guys know that this is going to be one of my last videos, if not the last video that I make here in Baltimore, so you won't see this lovely garden background anymore, but you're going to see something else. I'm going to be moving to Southeast Asia and exploring all the countries there for the next year or two before moving on to somewhere else. So I'm very excited. I look forward to sharing all of that lovely content with you guys. Thank you in advance for your support. Now, the point of today's video is to talk to you guys about investing a little more. I want to share with you guys my opinion on the market, whether it's a good time to invest right now or not, and the difference between short-term and long-term investing. So, first, let's define short-term investing. That's any kind of investment that's for less than 1 year. You buy a stock and then you sell it in less than 365 days. Then long-term investing happens when you buy it and you don't sell it for at least 1 year or longer. Typically 3, 5, or even 10 years, depending on your patience, the market, and your investment. Right now, the market is very volatile. It's full of inflation, supply chain issues, possible recession. There's the war in Ukraine, the Fed raising interest. All of this is spelling disaster for people who are already holding stocks like myself. But it's not all doom and gloom like the media might like you to think. You know, it is a bear market right now, which means a market where people are selling things, stocks are worth less, and it's generally regarded as a time to invest in other things that aren't stocks. Opposed to a bull market, which is a time when everyone is buying, everyone is making money, all the stocks are going up. It's like money is falling from the sky for people who are invested. But there are some differences between these, and I'd like to share them. So because of these current market conditions, all of the stocks pretty much everywhere are at a massive discount. The prices and values have been slashed. People are losing their minds because of this. Even many of my own stocks are at quite a slashed value from their original purchase, barring one stock, Tesla, the best one. I'm not worried because bear markets typically and historically last much less time than do bull markets. And even though my stock's value has gone down a lot, I see it as an opportunity. So it's an opportunity to buy all of these stocks that you already have, or if you own no stocks, it's the perfect time to get into the market at a less risky value, you know. Imagine buying 100 stocks at $10 each. That's $1,000. Now imagine that same company is valued at $2 or $3. Now you can buy like 3 or 4 times as much stocks for that same $1,000, and then when it goes up, you make so much more. And if the company is doing well and not just rising and falling with the market, then you're going to see even higher multiples of your initial investment. The thing is, a lot of people right now are doing what's called pump and dump. That's short-term investing, and it's where you pump a stock full of money, buy all kinds of shares, and then you dump them, you sell them shortly after. It could be a few hours, a day, a week, or a month later, but you're going to be selling that stock in a very short amount of time, with the rest of the people who are pumping and dumping at the same time. Kind of like trends on social media. You kind of have to keep up with the market and follow what's happening to perform these kinds of things properly. Now, this is fine, and a lot of people have made a lot of money using this strategy. But there are some tax implications that go along with this, depending on the length of your investment. General short-term investments, depending on how much money you make from them, can charge you anywhere from, I think, 15 to 50% taxes on the money that you make. And so I want to be clear, this is the money that you make, the profit that you get from your investment when you sell, not the entire investment itself. So if you put in $5,000 and then you sell your stock investment and your total value is $10,000, then you pay the taxes on the $5,000 profit, not the $10,000, like some people might believe or might be confused about. So you have to worry about not only the volatility of the market, are you buying and selling at the right time or not? Are you going to lose your investment? Are you going to miss your shot? But also the money that you do make from this kind of pump and dump scheme or short-term investing plan is going to be taxed heavily. Now, when you do a long-term investment plan, depending on your profits, you can pay anywhere from 0 to, I think, 20 or 30%, depending on the profit that you make. So even when you're doing this, guys, you have to pay attention to your annual income, if this is your only income or is in addition to others, because you go into different brackets on your taxes. Not only your regular taxes, but the taxes you pay on your stock investments. And this is called capital gains tax. So if you kind of buy and sell at a staggered pace throughout the year or over the years, matching whether you're doing well or poorly at your other jobs or other income sources, you can effectively lower your tax bills while making relatively the same amount of money. And this can be very good for, like, if you lose your job or suddenly one income stream is massively decreased for some reason. There's another pandemic or something, and then it kind of saves you from being left out to dry. And so this is the difference. And if you look at investments over the long term versus a short term, most investors and experts will explain and tell you that the long-term investments almost always are the better investment, where you actually see a higher return on investment. You may get more money up front with the short term, but in the long term investments are much better. And I'm going to go even one step further, guys, and say that even if you're not interested in the stock market necessarily at all, you can still buy into index funds where your money will be kept relatively safe. An index fund is something that buys hundreds or thousands or even more than 10,000 different stocks in a certain genre or theme. And by doing this, you're safe from certain companies tanking and going out of business. You also benefit from when many companies do well. It's kind of a safety net, and generally you receive less drastic returns, but it's also much safer, and when things are going badly, you don't lose as much. In addition to this, it's managed by either experts or by computer systems that simply track what the stocks are doing And so you pay very little fees compared to if you hire a person to manage your stocks personally or invest into an ETF or mutual fund. These fees are going to be much higher, and even if you see higher returns, most of those returns are going to be eaten away by the fees and tax structures of these programs. I don't really recommend these very much, except for some very rare cases. Anyway, guys, my opinion on the stock market is now a good time to invest. In my opinion, yes. Now, I want to be clear and let you guys know that I am not a tax professional, I'm not a stock professional, I'm not a financial advisor. I'm just a guy on YouTube telling you about his experiences and opinions. So please don't go and invest all your money just because of something that I say. It's your money. You need to do your own research and be aware that there are very high risks to investing in the stock market, regardless of the market conditions. So please, like I always say, don't invest any money that you're not upset about losing, because there is always that chance you can lose all your money in any investment. To end on a higher note, guys, I hope that all of you make a lot of money on some investments. I hope that I've helped teach you about some investing techniques and some confusing aspects of the market, and have convinced you to increase your wealth and begin this new journey of financial independence. Until next time, guys, you might see me in Asia next. Bye.